All right, so everyone's talking about central bank digital currencies, CBDCs, right? But they're not just some futuristic fantasy anymore. We're talking real world stuff happening now, especially in emerging markets. It feels like they're leading the charge, wouldn't you
Oh,
say?
absolutely. There's a ton of momentum building,
Yeah,
especially in those economies.
exactly. So today we're diving deep into some papers from the Bank for International Settlements, the BIS, to see what central bankers in these emerging economies are thinking.
Yeah, those BIS papers are a treasure trove of insights.
Totally. What's
Well,
driving them to explore CBDCs? What are they worried about? How are they designing these things? And what happens when CBDCs cross borders? I mean, we're really getting into the nitty-gritty here.
yeah, it's like we're getting a sneak peek behind the curtain.
Right. And you shared these papers with us, so we're going to unpack it all for everyone listening.
Sounds good.
So, one of the first things that jumped out at me was just how many different reasons countries have for exploring CBDCs.
Oh, yeah. It's not a one-size-fits-all situation.
Right.
Each country has its own unique context and goals.
For sure. But it was really interesting to see that financial inclusion is a huge motivator for a lot of these emerging economies.
Yeah, that's a big one.
Yeah.
Especially when you consider that millions of people in these countries are still unbanked.
It's crazy to think about how many people are excluded from the traditional financial system.
Yeah, and CBDCs have the potential to change that by providing a digital alternative to cash and making financial services more accessible.
That's the hope, anyway. And it's not just talk either. The BIS papers lay out some very specific ways that CBDCs could tackle some of the roadblocks that have kept people out of the financial system for so long.
Right, like the lack of physical bank branches in remote areas or the high cost of traditional banking services.
For sure. But what's refreshing is that the BIS papers don't pretend that CBDCs are a magic solution. They acknowledge that there are limitations, and they get into the weeds of those complexities. It's not just a matter of giving everyone a digital wallet and calling it a day.
It's exactly. Take the issue of limited physical access points and unreliable ICT infrastructure in many emerging markets. I mean, a CBDC won't magically solve those problems overnight.
Nope. And the papers address that. They talk about leveraging existing agent-based banking networks like the ones they already have in India and Indonesia.
Right. Those networks could be expanded to reach people who don't have easy access to bank branches. It's about being practical and building on what's already working.
Love that. Practicality over hype. And then there's the whole issue of digital literacy. Not everyone is comfortable using technology or navigating digital interfaces.
Oh, that's such a crucial point. And the papers don't shy away from that either. They highlight the need for education and support to help people understand how to use CBDCs safely and effectively.
Makes total sense. And they have some cool ideas for how to do that.
Oh, yeah. Like what?
Well, they talk about Mexico's plan to use mobile phone numbers as initial CBDC account identifiers.
Oh, smart. Because most people have phones, even if they don't have bank accounts.
Exactly. So it's like meeting people where they are, using technology that's already familiar to them. That's the kind of creative thinking I love to see.
It's about breaking down barriers and making financial services truly inclusive.
Totally. But let's be real. There are also some major anxieties swirling around CBDCs, right? I mean, the BIS papers don't try to sugarcoat the potential risks.
You're right. There are definitely some valid concerns that central banks are grappling with.
Big time. Like the operational burden, for one. I mean,
Yeah.
think about it. You're talking about maintaining system stability and security in a world where everything's becoming increasingly digital. It's a huge undertaking.
Absolutely. And the papers go into the nitty-gritty of that. They talk about the need for new regulatory frameworks and robust risk management systems to ensure these systems are resilient and secure.
Because one little glitch can cause major chaos.
Right, totally. Remember what happened with the Eastern Caribbean Central Bank, the ECCB, and their Dcash pilot program?
Oh, yeah, that outage they had back in 2022 because of an issue with their service provider.
That was a wake-up call for a lot of central banks. It really hammered home the point that you can't just rush into launching a CBDC without having a rock-solid foundation in place.
That's for sure. And then there's the whole issue of data privacy. I mean, let's face it, CBDC payment data can reveal a lot about our behavior and preferences, and that's a little bit unnerving, to say the least.
No doubt about it. And the BIS papers dive deep into that too. They emphasize the importance of establishing credible privacy and data governance frameworks right from the start, not only to mitigate risks, but also to build trust and encourage people to actually use these systems.
Because no one's going to embrace a system if they feel like their privacy is being compromised.
Right. It's about finding that balance between security and individual freedoms. It's a tough needle to thread, but it's essential for the long-term success of any CBDC project.
Totally agree. And it's not just a simple matter of protecting data either. The BIS papers point out that there are a lot of different players involved in managing CBDC data consumers, financial service providers, data service providers, even government entities. It's a complex web of relationships.
It's a big ecosystem, and it's crucial to establish clear rules and governance systems for how that data is stored, owned, and shared. We don't want to end up with these data silos or walled gardens that restrict access to information and create unnecessary barriers.
Transparency and accountability are key.
Absolutely. We need to make sure that CBDCs are designed and implemented in a way that protects individual rights and prevents the misuse of sensitive information.
Couldn't have said it better myself. So it sounds like central banks are taking these concerns seriously. It's not just about the hype of this new technology. They're really thinking through the potential risks and challenges.
Oh, for sure. They're proceeding with caution and a healthy dose of realism, which is encouraging to see.
It is, because the stakes are high. But, you know, despite all these challenges, there's a sense of excitement in these papers.
A sense of what?
Like a real sense of possibility. Like central banks are genuinely optimistic about the potential for CBDCs to improve financial systems and make a real difference in people's lives.
Oh, yeah, definitely. I think that comes through loud and clear.
Mm-hmm.
They recognize the challenges, but they also see the enormous potential of this technology to drive positive change.
That's the spirit.
Right. So I think it's about finding that balance, acknowledging the risks, but also embracing the possibilities, because that's how we'll unlock the true potential of CBDCs.
Couldn't agree more.
Have them back.
All right, so last time we left off talking about data privacy and governance, right?
Right.
Really important stuff, especially when you think about how CBDCs could impact the whole financial system, like shake things up.
Yeah, definitely a lot of central bankers are worried about that.
For sure. And I mean, one of the big anxieties we saw in those BIS papers was this whole idea of bank disintermediation.
Oh, yeah, that's a big one. It's like, what if everyone ditches their bank accounts and just goes straight for a CBDC wallet?
Right. Like, why bother with the bank if you can hold your money directly with the central bank?
Yeah, exactly. The BIS papers don't sugarcoat that concern at all.
Because banks rely on those deposits, right?
Absolutely. It's like their lifeblood. And the worry is that CBDCs could cause a mass exodus of funds,
Yeah.
leaving banks scrambling.
And I get it from a consumer perspective. I mean, why wouldn't you want to hold your money directly with the central bank? It's got the government's backing. It's probably seen as safer.
Right, especially during times of uncertainty, like when the economy's looking shaky.
Totally. People want that sense of security. But then on the flip side, like you were saying, banks could really struggle.
Oh, yeah, they could end up having a hard time getting the funds they need to operate.
So it's like a delicate balance, right?
Yeah.
We want the benefits of CBDCs, but we don't want to trigger a banking crisis in the process.
It's a tough needle to thread, for sure. But the BIS papers do highlight some ways central banks could try to mitigate those risks.
Oh, yeah. Like what kind of things?
Well, they talk about things like setting limits on CBDC holdings so people can't just move all their money over at once.
Smart.
Yeah. Or adjusting interest rates to make CBDCs less attractive compared to bank accounts, to try to keep that balance.
So it's like they'd have these tools they could use to kind of fine-tune things.
Exactly. And they also talk about making sure banks have enough liquidity, like backup funds they can access if things get tight.
Okay, so they're not just sitting back and hoping for the best. They're actually thinking about ways to manage these potential risks.
Yeah, it's like they're trying to get ahead of the curve, which I think is really important.
Absolutely. So we've talked about the impact on banks, but what about the bigger picture? Like, how do CBDCs affect monetary policy?
Oh, that's a huge question. I mean, we're talking about uncharted territory here.
Right. It's like a whole new set of rules.
Because think about it. If CBDCs become the main way people make payments, it gives central banks a much more direct way to control the economy.
Okay, hold on. You're going to have to break that down for me. How exactly could CBDCs change things for monetary policy?
Well, imagine this. Central banks could adjust the interest rates on CBDC holdings directly.
Oh, wow.
So they could directly influence how much people are spending and borrowing. And they could do it in a much more targeted way.
So instead of using those blunt tools they have now?
Exactly. They'd have a much finer level of control over the money supply and how money moves through the economy.
That's both exciting and a little scary, don't you think?
Oh, for sure. Like, with great power comes great responsibility. Right?
Exactly. And I mean, the BIS papers even point out that traditional monetary policy frameworks might not work as well in a world with CBDCs.
Right. We might need to rethink some things. like how we measure inflation or manage interest rates.
Because the old playbook might not cut it anymore.
Exactly. And they talk about this really interesting potential issue, this blurring of lines between monetary and fiscal policy.
Okay, now you've lost me. What's the difference? And why does it matter for CBDCs?
All right, so think of it this way. Monetary policy is what the central bank controls.
Yeah.
Managing the money supply, interest rates, all that stuff.
Right. And then fiscal policy is more about government spending and taxes.
You got it. And traditionally, those two realms have been separate, different responsibilities, different goals.
Makes sense. Keep things clear.
But CBDCs could potentially shake that up.
How so?
Well, imagine a government using CBDCs to send money directly to citizens, bypassing the banks altogether.
Oh, I see what you're saying. Like stimulus checks, but on steroids.
Yeah, exactly. And that raises some questions like, what if the government starts using CBDCs to fund projects that maybe the central bank doesn't agree with?
Or to reward certain groups, for political reasons.
Exactly. It could potentially undermine the central bank's independence.
And the stability of the currency. Right.
Right. So it's crucial to have clear rules and strong institutions to make sure that doesn't happen.
No funny business allowed.
Right. But all these discussions about CBDCs got me thinking about the future of cash.
Yeah, like, are we all headed for a cashless society? Is that the end game here?
Well, the BIS papers acknowledge that CBDCs could speed up the shift away from cash. But it's not inevitable.
Okay, so it's not a done deal.
Nope, and a lot of central banks are being cautious about it. They're saying CBDCs are meant to complement cash, not replace it, at least for now.
Makes sense. But I'm curious, what are the arguments for and against going cashless?
Well, some people think a cashless society would be more efficient, less crime, easier to track transactions.
Right, I can see that. But on the other hand, what about people who don't have access to technology or the internet?
Yeah, that's a huge concern, especially in emerging markets where digital inclusion is still a work in progress.
We talked about that before. We don't want to create a new form of exclusion.
Right, and then there's the privacy issue. In a cashless world, every single transaction would be recorded and traceable.
Kind of Big Brother-ish?
Yeah, some people worry about that for sure.
So it's a tough call. There are pros and cons to both sides.
Definitely a lot to think about. And it's not just a theoretical debate either. We're already seeing CBDCs being tested and implemented in the real world.
Oh, yeah. Like where?
Well, the Eastern Caribbean Central Bank, the ECCB, they were one of the first to launch a live CBDC pilot.
Dcash, right. Didn't they have some hiccups along the way?
Yeah, they had that outage we talked about earlier. But, they've learned a lot from that experience, and they've been really transparent about sharing those lessons.
Which is great, because other central banks can learn from their mistakes.
Exactly.
Yeah.
And then there's the sand dollar in the Bahamas.
I've heard about that one.
They've actually rolled it out nationwide, so it's the first central bank-backed digital currency to be fully operational in a whole country.
Wow, that's amazing.
It is. And they're using it to promote financial inclusion, especially in those more remote islands where traditional banking is limited.
So it's like a tailored solution for their specific needs.
Exactly. And then there's Nigeria. They launched the Naira back in 2021.
Okay, I'm not super familiar with that one.
It's one of the most ambitious projects in Africa. They're aiming to boost financial inclusion, reduce costs, even use it for social welfare programs.
Wow, sounds like they're going all in.
Yeah, and a lot of other countries in Africa are watching closely to see how it goes.
So it could have a ripple effect across the continent.
Exactly. And of course, we can't forget about China. They've got the ECNY.
Oh, yeah, that's the big one everyone's talking about.
It's probably the most advanced and widely piloted CBDC out there.
China's definitely a major player in this whole CBDC game.
Oh, absolutely. And their progress is definitely making other central banks pay attention.
Right, because if China's doing it, everyone has to at least consider it.
Exactly. But it's not just about the big players. There are a lot of countries taking a more cautious approach.
Yeah, like dipping their toes in the water before jumping all the way in.
Right. Like Sweden, they've been exploring a digital currency for years now, but they're taking their time, doing lots of research and testing.
So it's more about a slow and steady approach.
Yeah, and they're really focused on building consensus, making sure everyone's on board.
Which makes sense. It's a big change.
It is. And the Bank of England, they're doing something similar. They've got this CBDC task force working closely with the government to figure out all the details.
So it's not just the central bank going it alone.
Right. It's a collaborative effort, which I think is really important.
Because they need to make sure any CBDC they create fits into the broader financial system.
Exactly. So it's really interesting to see all these different approaches,
Yeah, like there's no one right way to do this.
Right. Every country has to find its own path, what works best for them.
But it's clear that the whole world is engaged in this conversation about the future of money.
Absolutely. It's a global phenomenon,
Mhm.
and it's only going to get more intense in the years to come.
All right, so we've covered a lot of ground, talking about how CBDCs could work, the potential risks and benefits. But now I think it's time to zoom out, look at the bigger picture.
Yeah, the global implications, right. It's where things get really interesting.
It's like we've explored all the nuts and bolts, the machinery, and now we're stepping back to see the whole factory in action.
Exactly. And this is where the conversation shifts from just tech stuff to geopolitics.
Okay, now you've really got my attention. Geopolitics and CBDCs. What's the connection?
Well, think about it. For decades, the U.S. dollar has been the king, right? The dominant currency for global trade and finance.
Right, the big cheese.
Exactly.
Yeah.
But CBDCs have the potential to shake that up, like really challenge that dominance.
Oh, wow. Okay. How so?
Well, as more countries roll out their own digital currencies, especially major players like China, you could start to see different currency blocks emerging.
So instead of everyone relying on the US dollar?
Right. You might have countries using CBDCs for international transactions, bypassing the dollar altogether.
Wow, that would be a huge shift.
It would be seismic. And it's not just about convenience, it's about power.
Power how?
Well, it gives countries more control over their own financial systems. They're not as dependent on the U.S.
Right, I can see that. Like it's a way to assert their own financial independence.
Exactly. And this is super appealing to countries that maybe haven't always had a great relationship with the U.S. or have felt excluded from the global financial system.
So you're saying CBDCs could actually shift the balance of power between nations?
I think they have that potential, yeah.
Yeah.
Take a country like Iran, for example. They've been hit hard by U.S. sanctions, limited access to the dollar-based system.
Right, I remember reading about that.
Well, CBDCs could offer a way around those restrictions. They could trade directly with other countries using their own digital currencies.
It's like creating a whole parallel financial universe.
In a way, yeah. And that's why countries like Russia are also so interested in CBDCs. They see it as a way to reduce their reliance on the West.
So it's not just about the tech, it's about geopolitics.
Exactly. CBDCs are a tool that countries can use to advance their own interests on the global stage.
That's a bit mind-blowing. It's like we're not just talking about money anymore, we're talking about global power dynamics.
Oh, absolutely. It's like we're witnessing a potential shift towards a multipolar world.
Multipolar, what does that mean exactly?
It means that instead of one dominant superpower, like the U.S., you have multiple centers of power, maybe China, the EU, India, playing bigger roles.
Okay, so more of a balanced world, in a way.
Potentially, yeah.
Yeah.
And CBDCs could help accelerate that shift,
Yeah.
by giving those emerging powers more leverage in the global financial system.
But wouldn't that also make things more complicated? Like, wouldn't it be easier if everyone just used one global currency?
Maybe, but there are trade-offs to consider. A multipolar world could lead to more competition, more innovation, but it could also create more friction, more uncertainty, especially in international trade and finance.
Yeah, I can imagine that. Trying to navigate a world with multiple sets of rules and regulations.
Right, it wouldn't be easy. And that's why it's so important for countries to cooperate.
Cooperate how?
Well, they need to work together to establish common standards for CBDCs, make sure they can work smoothly across borders.
So it's not just about each country doing its own thing.
Right, it's about finding ways to make this whole system function effectively on a global scale.
Otherwise, it's like building a house with everyone using different materials and blueprints. The whole thing could collapse.
Exactly. And that's where organizations like the BIS come in. They're trying to foster dialogue and cooperation among central banks.
So they're like the referees, making sure everyone plays by the rules.
Exactly. And that's crucial because we're talking about a potential paradigm shift here.
A paradigm shift in what way?
Well, for centuries, money has been a physical thing, something you can hold in your hand.
Coins, banknotes, that kind of thing.
Right. But CBDCs are purely digital. They only exist as entries in a digital ledger.
So it's like money is becoming intangible.
Exactly. And that raises some fundamental questions about what money really is, where its value comes from, how we protect it in this digital world.
It's like we're redefining money itself.
In a way, yeah. And I think that's the most profound implication of this whole CBDC revolution. It's forcing us to rethink our relationship with money,
Yeah.
at a very basic level.
It's definitely a lot to wrap our heads around.
It is, but it's also incredibly exciting, don't you think? like we're on the cusp of something truly transformative.
I agree. It's definitely a fascinating time to be alive, especially in the world of finance. So I think we've done a pretty good job of unpacking all of this, the motivations, the designs, the risks, the potential benefits, the global implications, even the future of money itself.
Yeah, it's been quite a journey, and I hope our listeners have a much clearer understanding of this complex landscape now.
Me too. Because CBDCs are more than just a tech innovation, they're a potential game changer for the whole world.
Couldn't have said it better myself. The CBDC revolution is upon us.
Thanks for joining us on the deep dive. And until next time, keep exploring, keep learning, and keep those tough questions coming.